Hey, what's going on everybody? Welcome back. It's Travis here with JT Wealth. In today's video, I'm going to be talking about how you can use passive income via dividend investing to pay off either your rent or maybe your car payment a whole lot faster than you ever would have thought before. So let's get into it. Alright everybody, like I said, welcome back. Thank you so much for joining us. If you're new to the channel, hopefully you find something you like in today's video. Remember to give us a big thumbs up and consider subscribing to the channel if you haven't already. Now, if you've checked out the channel in the past, you know both Julie and I are huge dividend investors, big fans of passive income as a whole. But in today's video, we're going to take a slightly different approach to our normal dividend investing strategy. I've read a couple articles and seen a couple other people talk about different stocks that pay out a much higher dividend ratio than some of the dividend kings or dividend aristocrats we normally talk about. So today we're going to take a theoretical approach to investing an average amount of money into one of these high dividend paying stocks and taking a look to see how that return is going to look over a 10-year period and what you'd be able to do with those returns if you so chose. I know a lot of people are impatient. They're not a huge fan of waiting 20, 30, 40 years to see what the compounding interest effect from dividend investing can have on their overall portfolio. So today's video is kind of geared towards you guys. If you're looking to make an investment into a dividend stock, but maybe a little bit impatient, perhaps you could look at this stock we're going to talk about today, and we'll get into that just after this. Your normal disclaimer that if you are here to see Julie, don't forget you can check her out over on the TipRanks YouTube channel, where she does her pre-market morning update videos Monday through Friday to let you know everything that's going to go on in the market that day before opening bell. So don't forget to check her out over on the TipRanks YouTube channel. And if this type of investment strategy appeals to you, consider using one of the links in my description section down below, where I would recommend using either the Webull or the M1 Finance link to start a new investment portfolio and set it up for whatever the purpose is you're going to use. But it definitely helps out the channel when you do that, so we appreciate it. All right, now I think the best way for us to do this is to remind you first that this is a theoretical example and that I wouldn't necessarily recommend this option for everybody. So what we're going to do first is look at the dividend kings, some of those stocks and what their ratios are, and then we're going to break down one of them in particular before we get into this high dividend paying stock that could help you pay your rent or your car payment really fast. All right, so here you can see a picture of some of the dividend king stocks. And by dividend king, I mean they've consecutively been increasing their dividends for over 50 years, which you can see there in column 3. If you go over to the right, you can see their dividend yields. Now these are between 2 and 3 point something. I see a 3.5 there down at the bottom with Procter & Gamble. So you're looking at, a fairly good dividend yield over the long term, but nothing extravagant, right? These aren't the kinds of stocks that you're looking at to say, I'm going to make a massive growth over the next year with. And a lot of videos have been done to show you how much money you would need invested in dividend stocks to have, say, $10,000 of extra income at the end of the year from your dividends. So this is going to kind of showcase what that would look like if you're investing in those low dividend yield stocks. It looks something like this. So here's a dividend investment income chart, or a dividend income investment chart, sorry. And you can see that you would need $333,000 invested at the average dividend yield of 3% just to have $10,000 pre-tax yearly income. Now, if you go up to 4%, you could get that same $10,000 annually with $250,000. If you're getting a 5% yield, you can get the same $10,000 with $200,000. Now here's a cool chart too, guys. If you're a dividend investor, this is something to take into consideration. Your blue line all the way there at the bottom, that's only dividend reinvestments. You're not seeing any growth in your dividend. Your red line is only dividend growth, but no dividend reinvestment. The double compounding effect of that green line means you're getting dividend reinvestment plus dividend growth annually. And you can see that that has that significant compounding effect. So whether you're going to do a slow and steady dividend king approach or you're going to go for the more aggressive stock that we're going to talk about today in just a second, you want to remember to definitely make sure you're doing dividend reinvestment to take advantage of any dividend growth and compounding interest of those reinvestments. But now let's take a look at two things that I thought was going to be perfect for this video, and that is the average cost of rent in the US and the average cost of a new and used vehicle in the US. And I broke those down to average car payment so that we could do it in an annual way. So if you see here, the average car payment is rising, but in 2020, the average new vehicle car payment was about $568, whereas the average used vehicle car payment was about $400. Then I went on to look at the median monthly housing costs for renter-occupied housing units. So basically, what's your rent cost everywhere in the US on average? And we're going to run with about $1,000 for the example that we're utilizing today, as that sits just in the middle of that $901 to $1,200 US average. That being said, if you lived in one of those dark green states like California, I apologize. We're not utilizing your state for this example. All right, so here's the quick breakdown numerically. Average new car price, $568 times 12 months would be $6,816 a year. Average rent in the US of about $1,000 for that year period, $12,000 annually. So how long will it take you to create a passive income source via dividends that could pay off your car or your rent payments every month for every year? All right, now this is where it gets good. We're gonna take a dividend king stock like Coca-Cola and go through it and break it down to show you guys how much you would need, or what you would get basically, for investing $10,000 and then putting a little bit in every year and see where that would get you. Then we're gonna look at our new dividend stock with a 12% yield and see how long that would take. Hint, it's a lot faster. All right, so here you can see Coca-Cola Company, ticker KO, with their dividend history from the NASDAQ page, okay? They have an annual dividend of $1.68, but their dividend yield is 3.13. Now, normally I'd say that's great, and I would want to hold them in my long-term dividend portfolio. However, when I went over to MarketBeat and I put it into the dividend calculator, I said it's an individual stock, it's going to be distributed frequency of quarterly, because that's what KO uses. DRIP or dividend reinvestment is yes, and I said $10,000 is our average base for the initial investment, which at a share price of $53.93 got us 185 shares of KO. I put in the annual dividend yield of 3.13, and I kept these numbers low. Expected annual dividend increase percent year, 1% per year. Expected annual sales share price appreciation per year, 3%. Those are the baseline averages that MarketBeat puts in there for you. And then I went ahead and said you're going to make an annual contribution of $4,800 a year, which, as you know, is only $400 a month or $100 a week. Then we said we're going to invest this money for 11 years. All right, so here's the 11-year breakdown of what KO would provide for you with an 11-year investment. And if you already saw it at the bottom of the last screen, the bottom right of this screen will show the new balance. Your $10,000 investment is now over $90,000, which is fantastic, but that's not what we're looking at so much for this video. Let's take a look at your annual dividends. After the first year, you've made $312. After your fifth year, you're making $1,087, but that's in a whole year. After your 11th year, you're still not making $3,000 a year from this investment. So after 11 years of putting this amount of money into the KO stock, you're still not paying for a new car with this investment. Maybe a used car with this investment, but that's not what we're going for. So let's get into the main meat and potatoes of today's video, and that stock is QYLD, Global X NASDAQ 100 Covered Call ETF. And QYLD has a 12.1% dividend yield with an annual dividend of $2.7392 for a stock that only costs $22.5801. So how does QYLD work? Well, they're a covered call option ETF, which it's designed to offer investors potential monthly income while seeking to lower the risks of investing in a major US index through a strategy that writes monthly covered call options on the NASDAQ 100 index. So the covered call writing process is as follows. They buy all the equities in the NASDAQ 100, then they sell NASDAQ 100 index options to a counterparty that expires in 1 month. The premium is received in exchange for the sale of the index options. And at the end of the month, QYLD seeks to distribute a portion of that income from writing and selling the NDX index options to the ETF shareholders. And at the beginning of each new month, the process is repeated. So like I said, this is a theoretical example, and we're using QYLD because they do have such a cool option in the options realm of ETFs, but also because they have that 12.1% yield. So in the event you do decide to attempt something like this, and I'm not telling you to do that, but definitely look up QYLD and figure out exactly what it is they're doing to make their money so you can feel a little bit more confident in your due diligence on that stock before you decide to invest. Now, let's look at the numbers for QYLD in their 11 years. And just to show you guys, I'm using the exact same dividend calculator for this that I used with KO. It's an individual stock. The distribution frequency for this, however, is monthly, not quarterly, so I did adjust that. It does use DRIP. And for $10,000 at $22.58 a share, that allowed us to purchase 442 shares of this stock. You can see the annual dividend yield at 12.1% with 1 and 3% respectively, just the same way as it was for KO, and an annual contribution of still $4,800 or $100 a week. Or well, $400 a month basically, right? I know there's 52 weeks in a year. But again, that 11-year investment period, and that allows us to move on to the graph showcasing each year throughout that 11-year period. Just look at the bottom right. Your new balance isn't $90,000 anymore like it was with KO. It's $158,868.77. That's an incredible return. And here's where it starts to get good, guys. Like I told you, I figured out a way you could either pay your car payment or your rent in a much faster time period than you would have expected using just this dividend stock. And we mentioned about $6,800 for your new car every year. Well, that would take you about 6 years, maybe 6.5 years to get to that $6,500, but between $65 and $8,139 of your 7th year. So in 6 years, you're going to be able to afford that new vehicle off just your annual dividends from that $10,000 initial investment. Now, Now let's say you're trying to pay your rent. We accepted that's a $12,000 payment on average. You're going to be doing that in less than 9 years. So if you don't buy the new car and you wait in less than 9 years, that $10,000 initial investment with your $4,800 annually is going to allow you to pay your rent. Now, I know this is a pretty extreme example because a dividend stock with a 12% yield is intense, right? That's certainly a stock that is going to be a little bit volatile. Maybe they're not going to see the growth you would have expected, but you are going to continue to get that dividend as long as they continue to pay it out. Which, this is a good time to remind you, there's no guarantee that any stock is going to continue paying out its dividends. We invest in dividend kings and dividend aristocrats because of their history of paying out their dividends and increasing them over a long period of time, whether it's 25 or 50 years. There is no such guarantee or no such history with a stock like QYLD. But you certainly can't look at the amount you could make and not get excited, right? You could pay off your car, you could pay off your rent, whatever the case may be in less than 10 years, and you can make a lot of money in the event a stock like this were to continue going in the direction it has been for that 11-year period. All that being said, this is not financial advice. I'm not your financial advisor. All the numbers and presentations in today's video are for information and educational purposes only. Please do not replicate any of them that I've shown you here today in real life without you doing your own due diligence and possibly looking at talking to a financial advisor and seeing if that's actually something you want to do with your hard-earned money. Alright guys, that's the extent of today's video. Let me know down below in the comment section what you think about QYLD. Are you a long-term dividend investor who's not so worried about getting a high yield? Or are you somebody that's more eager to make a lot of money a lot sooner and is considering investing in something like QYLD, even if it's not QYLD? Do you know of any other stocks that offer really high yields like QYLD? Let me know what your thoughts are down below in the comment section. And of course, if you have any further questions about the video I made today, dividend investing as a whole, regular stock market investing, ETFs, real estate, or anything else, please consider using the link down below to our Discord chat group, where that will get you access in via the Patreon, and you can ask me or anybody else in our group any question you want about investing, and somebody in there is going to have the answer for you guys. So if you've got those kind of questions, please consider joining that group. So hopefully you found something of value in this video today. If you did, don't forget, give us a big thumbs up and consider subscribing to the channel as well. Until next time, cheers.